So for anybody who is new in the room today, my name is John Fortune and I'm the head analyst at Ethical Trading Institute, where we basically teach people how to trade the Forex market like the institutions and the banks, which is with psychology as opposed to indicators and this kind of stuff. But what we're going to talk about today is we're going to go through one of the techniques we use, which is called weekly fundamental assessment. And we are basically going to assess the fundamentals which are coming up in the upcoming week. And we're going to plot a small chart basically in a spreadsheet, and we're going to use that to determine when the best times to trade or how we will trade in terms of tight stop losses or larger stop losses. So for anybody who wants to know more about us, you can just follow the link in the chat box. Otherwise, we're going to move straight on to the webinar. So just for the, I know some of the people who are in the room have been in the webinars before, so just bear with me very briefly while I explain to the new guys what we're doing, new guys and girls. It's very important each week to create a plan, and that plan consists of, or our plan consists of numerous steps. One of them, as I said, we're going to go through with you today, the weekly fundamental assessment. And the reason it's important to create a plan is so as you're not to trade based around your emotions, and you're not to enter the charts, open the charts, and just try and withdraw money from the charts like an ATM, because what happens is as the charts change and as they move, so do our emotions, and we end up trading our emotions rather than a plan which we can execute having been prepared in advance. So the first step of our plan, which we do each week, we run through all of the currency pairs. We run through about 30 different currency pairs. We didn't do 30 currency pairs this week because of reasons we'll go into in a minute. We run through all of the currency pairs and we do a Forex forecast, which you can follow in the link below if you wish. Each week, every Sunday, that goes out, and that's the first thing we do, to look at the technical analysis of all the different currency pairs. Now, once we've done that, we move on to what we're going to do now, which is called the weekly fundamental assessment. So if you just bear with me, I'm going to bring it up for you, and we're going to go through this together right now. Normal non-drawing. Let's just bring this up over here. So as you can see, this is a spreadsheet from last week. We have the currency pairs running across the top, and we also have the days of the week across here. So what we're going to do is we're just going to delete these from last week, if we can. I'm not an Excel pro, I must admit. One of my strong points. What we're going to do is we're going to plot on the charts the fundamentals we have for the week coming up this week. Obviously, we have quite a significant day on Thursday, which we're going to come around to, but most of you already know is the UK elections on Thursday. So let me just bring up the chart for the fundamentals. So we can see we have, I'll just minimize this for a second. We can see that we have the first thing to notice is that we do have a bank holiday in Switzerland and also in France and also in Germany. So the markets will be deprived of some liquidity today, but not so much as if you were to have a UK or a New York bank holiday. Can everybody see the screen, by the way? Can you see the, I just want to double check you can see. Somebody let me know if you can see the Forex calendar. Ben, can you see the Forex calendar up? Only half. Okay, that's what I thought. That's what I thought. That's a bit strange. Give me a second. Okay, that should be better. Yeah? Okay, great. So the first thing to notice is we do have bank holidays today in these countries, but it's not going to be as significant. In fact, you can see when this happens, when you have America and London, or New York and London, which are the two foremost financial markets in the world, it can push the price around even more volatile if we don't have this extra liquidity, because they're not considered the major players, although they are big players in the market. So just bear that in mind. The first piece of news we have is services PMI, which, as I said to you last week, is more important than the manufacturing for the pound, because it does have more of a services-based economy. You can see it came out lower than expected from the forecast, but we're going to look at the pounds specifically after we've done this. We're going to have a look at the pounds and discuss the pounds for this week and why we're going to be staying out and how they're setting it up. So not going to go into too much detail on that at the moment. The next thing we have today is the ISM non-manufacturing PMI, which, as we discussed, is a survey of the purchasing managers, as we discussed last week. So let me just bring this up and we can start to plot these in our graph here. So we have US dollar today, and we also have the pound, which has already come out. Now, for those of you who don't know, we discussed this last week. The ISM non-manufacturing is a survey of purchasing managers, and it's basically a leading indicator, because based on how businesses see the economy, they will react to it in terms of hiring more people, buying more products or more stock, etc., etc. So it is quite an important one we're going to watch out for. On Tuesday, we have the Australian cash rate decision at 5:30 in the morning. Now, this is a big one, and for those who were in the room previously, you know that we usually put down a capital X when we have an interest rate decision, because it is one of the big prime movers in the market. Now, in terms of the Australian cash rate decision, I can't remember if it was the last one or the one before, but the statement which follows, as you can see here, the RBA did indicate in one of their previous statements, as I say, I can't remember if it was the last one or the one before, but they did indicate that they believed increasing interest rates at this time would be counterproductive to what they are trying to achieve. And so therefore, I think it's unlikely that we're going to see an interest rate rise from the RBA. I think it's very unlikely we're going to see a cut. I'd be very surprised. I mean, these things can happen, and sometimes we've seen, especially with the franc move, that the people in charge of these banks can be a little bit, how should I say it, a little bit less than honest sometimes. So anything can happen, but the consensus is, and as you can see, even here, the forecast is to come out exactly the same. So if this comes out exactly the same, generally speaking, you'll find that the majority of the time, if it comes out the same or better than, or higher than in terms of interest rate decisions, you will see a push up in the currency. So could quite reasonably expect to see a push up from this on Tuesday morning from the Aussie. So we bear that in mind when we come to making our plan or seeking the trade for the week. We've got that down on Tuesday. That is one we're going to watch out for, and we're going to keep in mind for our plan. There's nothing else on Tuesday, as you can see. I mean, we're fairly light on news, to be honest with you, this week, which is a good thing, because it means if we're trading with tight stops, which we do, and we're trading down the lower time frames and looking for the bigger targets in the bigger time frames, then we're going to be able to position ourselves without too much of a risk of being whipped out. On Wednesday, we have the gross domestic product coming out at 2:30, so we will put down an X for this. Not quite. I mean, it can be as significant as an interest rate decision, but it would have to diverge wildly from from the forecast over here. It is, however, the gross domestic product is a primary gauge of economic health. So even though this has gone down as a small X, this is one to watch out for. And in fact, you probably find it's better to stay out for the Oz until Wednesday, the start of London around 8 o'clock here. We do have more Oz news, but I would say we're going to personally be looking for trades from Wednesday morning onwards in the Aussie pairs, and we can have a little closer look at that in a minute. On Wednesday, we also have US dollar crude oil inventories. However, we plot this in the Canadian pairs because, as some of you will know, Canada is a large oil-producing country, and in fact, it is the Canadian dollar, which is very closely correlated, pardon me, very closely correlated with oil. So what you find is if you have, generally speaking, if oil goes up, Canadian dollar goes up, and if oil goes down, the Canadian dollar goes down. And if you have an oversupply in the oil inventories, then that affects the price of oil because an oversupply decreases the price and an undersupply increases the price. Just for example, an easy way to remember it is diamonds. Diamonds are very expensive because they're rare. So if we have an oversupply, you will see the Canadian dollar, or potentially see the Canadian dollar affected to the downside and vice versa. So keep an eye out for this if you're involved in any of the CAD trades come Wednesday. Still goes down as a small X though because it is not in the same league as an interest rate decision. On Thursday we have the Aussie trade balance and also the Chinese trade balance. Now this is going to go down as a double for the Australian dollar because the Aussie dollar, of course, is affected by the trade balance. Again, depending on how it comes out, how much it diverges from the forecast depends on how much of a market mover it will be. But also the Chinese trade balance and Chinese news in general also affects the Australian dollar because China buys a lot of it imports a lot from Australia, for example, iron ore, copper, these kind of things. You know, Australia has a booming mining industry, and China buys a lot of it because China is obviously the economy has been growing up until not that long ago, and it's quite a large consumer of these things as it uses it in construction projects and this kind of thing. So, if you see the Canadian, if you see the Chinese trade balance, or for example, if you see any leading fundamental news for China come out negatively, usually this will impact on the Australian dollar. The idea behind it is, of course, if China is doing well, it's going to buy more stuff from Australia, and if China is not doing so well, it's going to cut back on the amount that it's importing. So bear that in mind for the Aussie US dollar. If I bring up the weekly fundamental assessment, you can see Aussie US dollar is starting to look a little bit heavy, especially with the interest rate decision on Tuesday. It's starting to look a bit heavy, but certainly from Wednesday onwards it can be considered. And we also have now, we come down to probably the biggest day, well, definitely the biggest day next week, which is we have the parliamentary elections on Thursday, and we have this in the pound, and we also have an interest rate decision on the euro. Now we're going to look at a couple of trades that we're looking at for the week. We're just going to finish this off here, and then we're going to look at the pound first. Now the parliamentary elections is coming out on Thursday, as you can see, or the elections take place on Thursday. However, the reason we are staying out of the pounds this week altogether is because despite the fact that this is going to be held on Thursday, all of this week we know that campaign is due to restart again after the attack in London, and things can happen, things can come out in a campaign. So generally speaking, campaigns are, election campaigns are viewed really as you could have fundamental news essentially coming out any time during an election campaign. So we're going to be staying out of this. And we're just going to put down the euro on Thursday as well, with the interest rate decision coming up. and we're going to put down a very large one for the pound, although you could consider an X on all of this for this week. We also have finally just coming to an end of the fundamental analysis. We have the USD unemployment claims, and we have the Canadian Governor Polo speaking on Thursday. He is speaking, and this is the sources, the Bank of Canada. He is speaking about financial system review, so this could be a big one. So we're going to put that down as an X as well before we move on to the pairs. So the Canadian will go down as as a larger X, and we will have the US dollar as a smaller X for the unemployment claims as they're released weekly. And then finally, on Friday, we do have the power manufacturing production, and we have CAD unemployment rates. So we'll put down 2 X's for the pound on Friday, and also for the CAD on Friday as well. In fact, that was on Thursday. So let's just change that. Okay, so you can see now this is the weekly fundamental assessment done for this week, and you can see early on in the week we could be looking at the euro yen, we can be looking at the franc yen, and this is 2 of the opportunities that I'm going to talk about with you now that we're looking at. You can see you can get involved in the CAD, but coming up to Thursday may be a little bit risky, and certainly the New Zealand is pretty much, although the Australian interest rate decision will have probably have some sort of effect on New Zealand. Generally speaking, there's nothing in New Zealand, and we don't really have anything significant on the US dollar either. So you can see now how we're going to be planning our trades. So we're going to look at the euro dollar, the euro Japanese yen. We're going to look at the the franc yen. We're going to have a look also at the New Zealand franc. We may also have a look at the US dollar CAD, but we'll just have to bear in mind. In fact, we will have a look at the US dollar CAD, but we just have to bear in mind this news. So we'll go back to, we've done the weekly fundamental assessment now, so we know what we're looking for. So starting with the US dollar, index, we'll have a look at US dollar index and oil, and then we'll run through a couple of the currency pairs that we're looking at for this week, and then we'll open it up to any questions if anybody's got any questions. So starting with the US dollar index, you can see that the US dollar index is in a downtrend, and we are forming a continuation pattern here. You can see prices accumulating. So we have no choice but to take a bearish bias on the US dollar index and a continuation of this trend. Now, some of you may be saying, that's crazy, we're at a support level, why would you be looking to sell the US dollar or sell anything at support level? Well, the reason is because you can't trade the same way all the time. In Forex, you have to understand the condition that the market is in. And if the market is trending like this and you start buying support, then you're gonna have a tough time. If the market is ranging, as we're gonna have a look at in the euro yen, or correcting in the euro yen and the franc yen, then yes, buying support and selling resistance it can be a very good idea. So we are going to have a bearish bias on the US dollar index, and we're going to look for a potential breakdown below this level here, down towards the 12,080 level down here. However, we're going to have a bearish to neutral bias because we still respect the fact it is at a support level and it could bounce up, maybe even retesting the top of the channel over here. So we're going to have a bearish to neutral bias on the US dollar index this week. Next, we're going to head over and have a look at oil. Now, oil, as we spoke about, does affect the Canadian dollar. When oil is going up, the Canadian dollar tends to go up, and when oil is going down, the Canadian dollar tends to go down as well. Now, we're looking at oil like this. We have a major upward sloping trend line here, and we also have a downward sloping trend line here, and this is forming a wedge pattern. So generally speaking, on the higher time frames, we can see that this is correcting. However, OPEC has been pushing this to the upside as it has been restricting the supply of oil. We had a sell-off over here, as we discussed in the previous webinar, I believe. It might have been in the live room, actually, so I'm not 100% sure. But we discussed this sell-off after OPEC and why it happened. And I do now expect this at some point to start pushing higher. OPEC did extend the cuts to their production in oil, that's pushing the prices back up because, as you know, oil producing countries have a bit of a tough time ever since oil has come down off about $120 a barrel. It was even lower than this, only through their production cuts really have they pushed the price back up. So they have announced that they're going to extend these cuts. So we should fundamentally be seeing oil pushing to the upside at some point. Ian says the voice is starting to break up. Okay, thanks, Ian. That might have been earlier. Can you hear me? Can you hear me okay now? Is that a little bit better? If somebody could just say yes or no, that'd be great. Okay, I'm being told that the sound is okay. Better. Okay, excellent. Okay, thanks, Simon. Thanks, Ravi. Thank you. Excellent. Okay. So fundamentally, we're looking for oil to be pushing to the upside at some point. So it is trending down here. We do have this kind of move here. However, on the bigger picture, without zooming out, you can see it is moving up. So we're looking at this here as a correction of this here. Now, if we're looking for a correction, what we really want to see is a reversal pattern. So what we're looking for now is this to potentially be a head and shoulders pattern, in which case we could start seeing this push to the upside. Now, the problem we have is that it is still pushing to the downside at the moment. So whilst we have a bullish bias on oil, we do have to have a bullish to neutral bias on oil because of the manner that it's still moving down at the moment. So you can see we highlighted this. Still intermittent, is it, Ian? Okay, I'm being told that it seems to be coming through okay. It's okay now. Okay, great. No problem. Okay, fine. So we're looking for this to be a potential head and shoulders here. But in order for this to be confirmed, we need a break above this level up here. So it's not yet confirmed. It is currently in the process of forming. We did put this down on the last weekly forecast here, and although we had Adam says you can hear me fine. Okay, great. Thanks, Adam. That's what I'm being told elsewhere as well. So I don't know if it was just before maybe Ian speakers or something. I'm not sure, but if it cuts out again, just let me know. So we highlighted this 46.86 area, and we had a bullish to neutral bias on oil last week, and we were looking for this move up here. But as price started to push down, we did take a couple of trades in the CAD to the downside, and we did capitalize on this move down. And we said if we do get a push down on oil last week, we were going to be looking down to the 46.86 and a right shoulder. Now, as you can see, it came down to this level and it formed a what I guess you would call a pin bar. It's got many different names, but we'll just call it a pin bar for ease to avoid confusion. And as you can see, it is now pushing down. It looks like it's going to come down and potentially try and retest the 46.86 level here. So we have we still have a bullish to neutral bias on the oil, because even though this is pushing down and we may have a very short-term bearish bias on this maybe for today, we are expecting this to hold and start pushing this to the upside. If we start seeing a breakdown below this level here, then we're going to be looking for a retest of the 44 level. But as long as it stays above here, we're going to have a bullish to neutral bias on oil. So what we're going to do now is we're going to have a quick look at a couple of the opportunities that we're looking at for the upcoming week in the actual pairs themselves. Now, I'll just bring this up quickly so you can see Euro and Japanese yen is a very good one we can be looking at. So we're going to head over to the Euro Yen. Now what we're looking at in the Euro Yen is we're seeing this kind of pattern forming. There is no doubt that this is trending to the upside and it's pushing up like this. It pulled up here and it actually failed to make a new high and it's forming a pattern. It's forming a continuation pattern here, what is known as an ascending triangle. Now we have 1 touch, 2 touch, 3 touch, so we could be seeing a 4th touch up to here. However, we are trading. We would rather trade in the direction of the trend overall. So the first trade we took it was actually a sell, and we're looking for this area down here, and then once we get down here, potentially we're looking for a move back up to the top of the ascending triangle. So we're seeing this as a continuation eventually to the 127, the 126, but all the while that this is sitting in this range. And as I said to you before, if you identify the market as being in a correction, then you can trade from the top, from the bottom, from the top, from the bottom. But the only problem is you still want to be as much as possible trading in the direction really, and even waiting for this kind of breakout. So we will take shorts, and one of the opportunities that we're looking for at the moment is a short down into this area. And once we get down into this area, or a possible retest of the 123.217 area, we are going to be looking for continuation to the upside. So this is one of the pairs that we're looking at this week. The next pair we're going to have a look at, as you can see, we don't have anything on the franc this week again, nothing on the yen. So one of the ones we're going to go and have a look at now is the franc yen. Just need to take the highlighter off so we can change the chart. So in the franc yen, we're looking at something very similar, which is not surprising because the euro and the franc, generally speaking, move together. We do still have a gap down over here, which gives us a little bit of caution that in the bigger picture, we could be seeing a deep pullback to close this gap. And if that happens, we would probably be looking at something like a 1, for those of you who know your Elliott wave, and a 2, and then followed by a potential 3rd wave. So we are keeping an eye out for this 3rd wave over here, but as you can see, this is a daily chart, so this could be a fair time before this actually sets itself up. But if we know the structure, we can also be looking to the downside for the wave 2, if that is what it's setting up to do. So as you can see, it's also creating a pattern here, which is known as an expanding triangle. And as you can see, there are usually 5 touches to an expand triangle. So you have 1, 2, 3, 4. We did get a sell-off from this area, so we are now looking for a potential completion of this pattern on the franc yen. You can see it does have a resistance here, and it is also forming somewhat of a reversal pattern within this pattern, which is head and shoulders. So what we are now looking to do is potentially capitalize on a trade from here down to potentially all the way down to the 112 level over here, which would give us the 5th touch of this pattern here, like this. And then you would be looking from this position here for a potential continuation of this, because it is a triangle, and so you could be looking at this as maybe something like a wave 4 or something. So this is the potential move we're looking at on the franc yen, and in fact we did look at this morning. Yeah, we sent out a signal actually on this morning. You can't see it here because the signal stuff are turned off, but this is where we're looking for on the franc yen. So one to keep your eye out for this week. This is a trade that we're looking for, and if you get a tight entry as we have on this up here, you can see the risk and reward on this trade is potentially very, very good. So I do like this one. The only thing I would say about this before we move on to the next one is this is a correction in an up move here. So if it does push higher and it breaks up above here and it negates this pattern, then we will continue to look for this to the upside. We're not going to keep selling into this if it starts to push higher, because that would just be suicide. So the next one we can have a look at is, let me have a quick look. We can have a look at 2 more. And these are from the blog as well that we put out every week. We're looking on the US dollar CAD. If we do get as you know, we have a bearish to neutral bias on the US dollar, and we have a bullish to neutral bias on oil. Now, oil at the moment is pushing to the downside, so we may retest that level again before it starts to push higher, in which case we may see this pushing up a little bit higher like this, maybe even a retest of here. Who knows? We'll just have to wait and see. But either way, we are looking for a continuation of this this type of move, and we're looking for 1.33500 level. Now, we were looking for this last week, and as you can see, all we had last week on this was pretty much 1, 2, 3, 4, 5 days of correcting. So I do anticipate this move potentially coming now this week, but we will have to wait and see if we can get the turnaround on oil from the support level that we're looking at. But keep your eye on this, because I think that this could at least start the move down to here, maybe making a double bottom by the end of the week, but it'd be nice if we get all the way down here. So if we start to see the US dollar breaking through to the downside below the support level that it's sitting at, and we start to see oil bounce, then we're going to see this head lower, and we're going to see this come down to the 1.3350. So we're keeping a close eye on this. We're just having to be a little bit patient to see what oil is going to do. And the last one we'll have a look at this week. We don't normally do 4, but why not? If it helps you out, we might as well do it. We can look at the New Zealand franc. Now, the New Zealand franc we have been looking at for a while, roughly probably even 2 weeks. Let me just check from here. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So yeah, you're talking about nearly 2 trading weeks from here to correct back up to here. Now, we're looking for a continuation down to the 0.6700 level. And as you can see, we were waiting for this correction to turn, and we were waiting for a sign to push us that this was going to push down towards the 0.7600 level that we're looking at, and then possibly even a bit further to the 0.66500. But it is the 0.6700 that we're looking at taking our profits on first, and then if we get a break into this area, we can look at a trade down to here. But as you can see, on, I believe, so Monday, Friday, Thursday, on Wednesday of last week, price traded into this downward sloping trend line that we have here. It also traded into the confidence area of this horizontal support level over here, which was broken and turned resistance over here, and it turned resistance over here. So we are now looking for a continuation of this move and a continuation of this leg. This is the primary trend. This is the secondary trend, or impulse wave, corrective wave, as you might know them. We are now looking for a continuation down to this area. We are looking on the lower time frames in the live room. We will be looking tomorrow to trade this. I think this could be very nice. We don't have much coming out of New Zealand or the franc, only the Aussie, which could affect the Aussie interest rate decision, which you may see an effect in the New Zealand pairs. So apart from that, keep your eye out on this one as well, because this could turn out to be a very nice trade. I don't have anything left to say apart from, because we're coming up pretty much now to the 40-minute mark. Shall I do the pound US dollar? I'll show you what I'm looking at in the pound US dollar, even though we're not trading it. You might find it interesting. I find it quite interesting. So let me go to the pound US dollar. So you know we have the elections coming up this week, and we'll just take a quick look at this before we open up to any questions. It seems quite interesting to me that they seem to be setting up to do either thing. We have, as some of you may know if you're based in the UK, we have had polls originally showing the Conservatives to form a majority government by quite a landslide, and in the recent weeks we have started to see polls coming out saying that this could be under threat, and in some polls, or one poll in particular, YouGov poll, did state that could even be seeing a hung parliament as the Conservatives failed to get a majority. Now, just to confirm, by the way, we're not interested in the politics side of this. We only are interested in politics insofar as how it affects Forex markets. So we're not here to give opinions or anything. That's not our job. Our job is to look at it and to try and understand how it's going to affect the market. Now, one of the ways that this affects the market is in times of uncertainty, it tends to affect an underlying currency detrimentally if there is uncertainty. So what we saw is once this YouGov poll came out, we did see a sell-off in the pound because traders, or the institutions, not really retail traders, but the ones who move the market, they sensed that this was not as certain as they might have once thought. Now, whether it turns out to be a rogue poll or whether it turns out to be a more accurate poll than some of the others, because some of the others are still stating that there's going to be a large majority. However, it's one thing that I find interesting is the YouGov poll that did state that they could be on for a hung parliament was the same modelling, which almost single-handedly stated that the UK was going to vote Brexit during the Brexit referendum, and all the polls said the opposite. So that is one thing that slightly makes me wonder if that is in fact a valid poll and not a rogue poll. So for those reasons, this is not quite as clear as a trader would hope, and so for that reason we're staying out of it. And as you can see, what's quite interesting, it looks like they could be setting themselves up either way here, because what we have here is again, for those of you who know about the Elliott waves, I'm not going to go too deeply into it, but we have a kind of ABC pattern like this. And within this, we have a potential 1, 2, 3, and then a fourth wave, and then possibly a fifth wave higher up. But we also have the potential for this to be the 1, 2, 3, 4, 5, and then a 1 pulling back for the 2, breaking out of this upward sloping trend line. And if they wanted to sell this off, they could quite easily sell this off from this position without affecting the overall structure of the market. So they're setting themselves up for both ways. And this sell-off here, which put them into that position, is a signal that they're not 100% sure like they used to be. So with that said, what we're going to do is we'll hand it over to see if there's any questions. If you've got any questions, please tap them into the box. Ray says, oh, you're very welcome, Ray. Appreciate that. I think they are recorded on the Portex website. Yeah, I apologize for any intermittent sounds. Any insights on the Euro US dollar? Yep, okay, Ravi, let's have a look at the Euro US dollar. So the Euro US dollar, we've been looking for the Euro US dollar to trade into this area over here, Ravi. So I am still looking for this now to trade into the 1.12950 area this week. I see a little bit of a pullback here. Don't see this as anything more than a pullback. So I would be looking now to trade this into the 1.12950 area. I mean, there's not a huge amount more to say, to be honest with you, on that, because I'm not going to be trading this to the downside because it's clearly trending up. It stops short of the resistance area up here. So, I mean, I expect this to trade into the 1.295. The only problem I have, Ravi, is that it is so close to the 1.2950 that for me, if it starts to move up from here, I may not be able to get the correct risk to reward on these trades as I would like to, because I don't trade one-to-ones or anything like that. So it would probably have to pull back a little bit further. But just looking, if we get a pullback, say if we get a pullback a little bit further, say down to here, then this is a trade that I'll be looking at this week. Into the 1.12950 area. So depending on how you trade, this is the target I'd be looking for. Whether we're going to get a bounce from here or not is yet to be seen. But once we do trade into this area, I'd be looking at taking my profits here, Ravi. and then I would be looking at waiting for this to enter into this area up here like this, maybe get an accumulation pattern or a continuation pattern before I start looking for the 1.13680 target next on this. So if I do get involved here, or if one wants to get involved here, I wouldn't advocate trying to hold through the 1.12950 barrier. So that would be how I'm going to look at it this week. Does that make sense, Ravi? Hey, you're very welcome. So Ray, I can see your question there about the website. What I'm going to do is, if there's no more questions, I'm going to hand back to. I can see Tim's got a question as well. I'm going to hand back to Ben in a minute, and he will be able to answer your question, Ray, on whether they're recorded on the website or not. So Tim asks, what is the minimum risk to reward you would consider? So the minimum risk to reward that I trade, Tim, is 98% of the time, 99% of the time, is a minimum of 1 to 3. Now, there's all kinds of reasons we trade that, but it's basically the maths. It means that if you're trading a 1 to 3 risk to reward, you only need to be right. It can be, say, even as low as 25% of the time. Now, obviously, the trick is to be right more than 25% of the time, because you want to make money. But when you're trading in the lower time frames, you will find that sometimes you can take 1 or 2 attempts to position yourselves into a good move. And if you take 1 or 2 attempts to position yourself into a move, and your minimum risk to reward is 1 to 3, then you will be making money quite often. So really, if you're trading in lower time frames, especially, my advice is do not take trades that are less than a 3 to 1. Now, I say 98% of the time because every now and then, if there is a very good setup and it is a 1 to 1.25 or 1 to 1.28, say it's just shy of the 1 to 3, then I will take it, because each trade is taken on a basis of different things. You have the obviously you have the money management, so you have the 1 to 1, 1 to 2, 1 to 3. But the other side is the probability of success of a trade. So how good is the setup? So if the money management is slightly off, I do take trades sometimes at 1.25, 1.28. If the probability that the trade is going to work out, I would consider it to be slightly higher. So does that make sense? But you don't want to do it all the time, because otherwise you start messing with the maths. And some of the trades we take are 1 to 4, 1 to 5, even up to 1 to 7. So when we have 1 to 7 trades or 1 to 5 trades, it pushes the overall risk to reward up above 1 to 1.3. So 1 to 1.3 is a minimum. So generally speaking, our average will be 1 to 1.4 maybe. So if I do take a trade at a 1.125 or 1.2.8, then it still keeps my overall average above 1 to 3 without really messing with the maths. So does that make sense? Yeah, sorry if it's one of those things. It probably needs to be. I could do a whole webinar based on just the money management side of it. So I'm trying to give it to you in as simple terms as possible. But in the live room, we do go through this kind of stuff. We've got time as well to go through all the formulas and the maths behind it if need be. So, but hopefully that answers your questions anyway. I'm learning. What is 1 to 3 or 1 to 5? I mean, okay, Ravi, yeah. So I know, and this is what I say to some of the people in the room as well, because everybody is at different levels. So if I'm saying something that you already know, please, just bear with me, because some people are learning some of this stuff for the first time. So Ravi's asking, what does it mean, a 1 to 3 or 1 to 5? So what it means is, Ravi, so you can see my screen over here, yeah? So it means for every trade you take, you're risking 1x, okay? Now, x is a percentage of your account. Some people choose 0.5%, some choose 0.3%, some choose 1%, some choose 2%, 3%, 5%. I wouldn't recommend trading 5%, or 3%, or even 1% really of your account, but some people do it. It's up to them. So if we take this, for example, just as 1% for argument's sake, okay? So for every time you place a trade, you're risking 1x, so you're risking 1% of your account. okay? And every time you place a trade and you put your, so every time you put your stop loss is 1% of your account. Every time you place a trade and you put your take profit, you want your take profit or your reward to be minimum 9 times out of 10, 3x. So that would be 3%. Does that make sense? So you're ensuring that for every trade you take, your reward is always more than your risk, and not just that, but it's more than your risk by at least 3 to 1. Because what you're doing, Ravi, is you're stacking the odds in your favor quite considerably by doing that. Oh, you just the pips varies, and this is one of the gripes we have as a company, Ravi, is that we get frustrated with the way people are constantly taught by people that to think about pips and all this kind of stuff, and all new traders discuss pips, and they all think about pips. And one of the myths in trading is, one of the things that actually messes up a lot of new traders is they see that making pips makes you a good trader, and losing pips makes you a bad trader. Or if you're risking too many pips on one trade, you can't risk this on this, and it's just all a nonsense, to be honest with you. Pips are virtually irrelevant. I mean, when we do our trading, we barely ever consider the pips. We barely even stop to look at them. What you want to do is you want to do it on a percentage of your account. So if you're on the pound New Zealand, for example, and you place a stop, 1% of your account could be, so let me just do this quickly just to explain to you, because I want you to understand, because it's important. So if, for example, you have the euro US dollar like this, yeah, and you decide you're going to take a trade up to here, and you're going to put your stop here, okay? You decide to put your stop here, so you make sure that this is 1% of your account. Your target has to be 3% of your account minimum, okay? Now, on the euro US dollar, this may be, you've entered here, and your stop is here. This may be, say, 50 pips, okay? Now, if we change the symbol, but we leave this exact same structure in place, and we just imagine now that the exact same structure is in place, but this, rather than the euro US dollar, is the pound New Zealand. So you enter here on the pound New Zealand. You put your stop here. Now, even though the distance is exactly the same in terms of measurement on the chart, you now could be looking at 160 pips. Does that make sense? Because the larger currency, pairs like pound New Zealand, pound yen, they have far more volatility, and so they move a lot more. So you need to have bigger stops in currencies like the pound New Zealand than you do in, say, the euro New Zealand. So whenever you set your stop, Ravi, don't ever really consider the pips, because the pips are next to irrelevant. You want to pick your spot, whether it's based on, I mean, there's many different ways, you know, of choosing the stop loss. You've got time stop losses, you've got technical stop losses. I mean, there's, again, you could do a whole nother webinar on it, but you pick the place for your stop, and you don't pick it based on money. So you definitely don't say, I'm just gonna risk, you know, $50 and your stop's here. You have to put it in a technical point. You have to put it in the correct space, and then once you found that, you have to make sure that is a certain percentage of your account. And then once you've found that and you have a certain percentage of your account, you have to ensure that your reward is at least minimum really 3 to 1 from that trade. So does that make sense? And hopefully it makes sense with the pips as well, because you can be trading exactly the same distance, but you'll have completely different pips depending on the currency pairs. It does. Oh, excellent. Okay, that's great stuff. Yeah. Lovely. So in fact, I mean, one of the interesting things you will see, which is what I was going back to just a minute ago, Ravi, about how new traders get caught up with the pips, and the reason they get caught up with the pips is because you have a lot of people who are doing the education, providing the education, who understand that you don't need to make money. You can make pips without making money. That's the truth. So you have people who push systems and this kind of stuff based on pips because they understand they can make pips without making money. That's just the honest truth. So one of the things you will see with our account, actually the ETI account, you can see we are actually up with a very healthy profit on the account this year. But if you were to look at the pips, you will see, I think that the account is down negative about a few hundred pips or something. Why? Because all of our winning trades that we took were on, say, the euro US dollar, where we made 30 pips, 60 pips, 100 pips. But each of those 100 pips was 3% of the account, say, just for argument's sake. And then you lose one trade, say, on gold, where you can have a stop loss of 1,000 pips. Now you've lost 1,000 pips, but you've only lost 1x of your account. So you've had 3 trades where you've made 30 pips on each. That's now 90 pips you've made, but you've made 3% of your account on each trade. That's 9%. So you're up 9% on your account, and you're up 90 pips. You lose one trade on gold, and you've got a 700 pip stop. You're now down 610 pips, but you're still up 8% on your account. So does that make sense, Ravi? Why pips don't equal profit and profit doesn't equal pips? And what you want to chase is profit. I mean, we're all here to make money. So I hope that all makes sense, especially to other people as well. So, okay. So are there any other questions before we wrap up for today? We'll give it 15 seconds, just to see if there's any final questions, and then I'll hand over to Ben. Ravi says good. Hey, you're very welcome, Ravi. Hey, you're very welcome, Simon. Yeah, it's a very important one. It's one that it frustrates us a little bit because it's heavily perpetuated, and it's very, very unhelpful for new traders. So it doesn't look like there's any extra questions, Ben. So did you want to wrap the webinar up, Ben?
Yeah, that's great. Well, firstly, I'd like to say a big thank you to you, John. That was really, really good. I think that everybody can probably see now that in these Monday sessions, there's a lot of value that you're already getting here, covering a lot of different things. So that's really good, and hopefully, especially for the newbies, this is really informative stuff. So if you do want to explore this more, guys, you can head over to Ethical Trading Institute. John runs live rooms on, is it Tuesday, Wednesday, and Thursday, John?
Yes, Tuesday and Wednesday, Thursday, and we're looking to open up a live room for the New York people, because we have quite a lot of customers pretty much all over the world. So there's quite a demand for the New York room, so we'll be looking at doing that this year.
Great stuff. Okay, and also in terms of recording, somebody asked about the recordings. These are going to be recorded. This one was recorded, and the previous one was recorded. We're actually in the process of creating an education page where these are going to be hosted, along with a few other articles as well. So everybody will shortly, this week I think, actually get an email about that. We'll be doing an in-house webinar on Wednesday as well on trend trading, so you'll all get an email about that. But if you want any specific content covered, maybe either in these sessions or the Wednesday sessions, then you can reach out to us at support@portexmarkets.com. But anything further that you want to speak about regarding this session, then reach out to John at Ethical Trading Institute. But I think that's all for today anyway, and we will wish you the best of luck with your trading this week, and speak to you soon. Thanks, John.
Yep, no problem. Thank you to everyone in the room today. We'll see you next week.